Hey traders, this is Blake Morrow with Trader Summit, and today I have Mr. Richard Matthews. How are you? Good to see you. We're going to be talking all sterling all day long, right?
Yeah, good. My favourite subject, the Bank of England, the governor of whom was described as having the intellect of a mollusk and the foresight of a banana in the papers this week.
No way.
Yeah.
That's brutal. I mean, how do you reconcile that as the Bank of England governor, reading that about yourself? I mean,
Yeah,
that's got to be pretty tough.
pretty tough. But they were hauled over the coals last week in the House of Commons and the House of Lords politically about their pretty awful record of forecasting. There's an inquiry being started onto their forecasting, and then there's a poll over here which showed that satisfaction by the public was the lowest since records began with the Bank of England. So, yeah, mind you, in another poll I saw last week, 3% of the British public thought interest rates have gone down.
well, let's discuss this in its entirety because I mean I've got so many questions. But first of all, tomorrow morning, your time and probably around the time this video is going to be launched or released, the UK is going to report its inflation data. So tell us how you feel about UK inflation. I know we could go all get the anecdotal evidence, go into the grocery store and blah blah blah, but how do you feel the UK is faring versus everybody else, everywhere else that's feeling disinflationary pressures?
Yeah, we're not. I think that when I look at compared to Euroland and the US, I think that we've still got high inflation. I think the optimists expect a 7 handle on it tomorrow. I think it'll actually be just above 8. But even if it's 7.9, that's 4 times their target level. It's still atrocious.
So what's making you an outlier in Europe right now? Aside from the fact that you're not European.
Yeah. They're English and we like cricket.
That's right.
I think that there's 2 reasons for this. That the Bank of England was really not slow getting started in hiking rates, but they were slow in being aggressive in hiking rates, and they let things go and they think it's transitory and nothing's going to happen. You remember that marvelous word, it's all transitory, it will go away.
Right.
And they've been playing catch up ever since. And it's failed to really get hold of the problem. And now we've got this I don't know if I'd call it a wage price spiral, but you've got very, very high wage demand and wage settlements going through. Junior doctors over here, which is it's quite hard. The first year in a hospital as a doctor, they're looking for a 35% rise. Now, some of that's backdated, and it's because inflation's eating into the wages. But once people start seeing wages like that settled, then everyone else is going, "Oh, I want more money." So it's pretty much self-feeding. I think it's a big problem, and the Bank of England now faces an issue. And putting aside, you might well get a really great figure tomorrow, and if you do, this will go by the by. And I mean, like, comes in at 7.5%, still not brilliant, but I think sort of 7.98%. The market's looking for the Bank of England to hike rates by 50 basis points. I don't think they will, and they've got a credibility problem if they don't.
So wait, I'm sorry to interrupt, but why don't you think they will?
I don't think they've got the cojones to do it.
Really?
Yeah.
So everything that they say about Andrew Bailey is true.
Yeah, well, he's not my friend. We've also got we have the way we finance houses over here is slightly different to America. That most people take fixed rate loans, and the loans are fixed for maybe 2 or 5 years. So people who borrowed 5 years ago, their rates are rolling off now. Those who borrowed 2 years ago, their rates are rolling off now, and they're probably paying 1.5–2% on their mortgages. These are up for renewal, and they're going to have to pay 6%. And they're tripling their mortgage payments, and there's a huge outcry over here about this. I personally think, well, you went into this with your eyes wide open. You should have realised that rates were historically low. They're trying to get the government to bail them out. I just don't think they're going to do that. But that's a very, very sensitive subject, and the clock is ticking towards a general election.
Well, it is, and I mean, I know there in the UK, it's very similar to like Australia's got some sort of similar, mortgage scheme, and I know that over the course of the next couple of years, it's going to be detrimental for borrowers, at these higher rates, so the Bank of England's in a pretty big pickle. They raise rates, 50, choose to fight inflation, or maybe like you say, they come in a little bit light and to maybe try to support the economy, as much as it probably is irrelevant at this stage. But based on everything that how are you looking at the sterling right now? Because what's the play? I mean, it's like I look at the sterling right now, and it looks like the sterling is calling the market's bluff. We've got higher prices. You see the rally that's happening in the sterling. It's broken out above 127. Do you continue to play the breakout? Do you continue to play this bullish move, or do you think that we're done here after this? Nice rise higher, that we're going to reverse? Well, I mean, what are your thoughts on how to play this thing?
On the basis that the Bank of England will disappoint, I will say that I'd play it from the short side. If they do actually come in with a 50 basis point move, I think you could see it pop up towards 130.
Now, 130 was a level that personally I've been looking at, just because it would be if I just draw it out for you really quick, it'd be the upper end of this channel. And you can see it here. It would look something like this. That would put us right up around 130. So if they did raise 50 and the cable or the sterling got another lift, do you sell it up there, or do you just play it to the long side till it gets there, or can we go farther than that?
I think that the market's looking at the Fed and saying, okay, the Fed nailed on, they're going to do another two hikes this year. And now they're starting to back away from that. I think traders started, oh no, they're only going to do 25. They're not going to do the full 50. So on that basis, you've got an interest rate differential coming in favour of sterling, and that's fact in favour of the euro, because I think the ECB are pretty hawkish. So on that basis, you'd buy it. But I think the Fed's still going to tighten. I thought those housing numbers that came out today were really strong in the States. I don't see many signs of recession over there. I know that money supply is slowing. I still think the Fed's going to be hawkish, and
well, I mean, we got the opposite problem that you do in the housing market here in the U.S. If you have a 30-year or even a 15-year mortgage that is below 4%, or for a lot of us below 3%, and it's a 30-year or a 15-year fixed mortgage, you are going to be hard pressed to sell right now, with the rates where they're at right now. So so we have this supply issue, and so it doesn't surprise me at all that building permits are going through the roof, because no one that owns a home is selling right now. So
right. So just to sum up, I think you could well see it pop up to 130 if the Bank of England come in at 50 basis points. I think the market's anticipating that. I personally think that they're going to be disappointed. I think the Bank of England, there are some signs that we're starting to look towards a recession, not massively strongly enough, but I just think that they want to play safe the whole time, and it's just where they've gone wrong. And politically, that every single newspaper, every TV channel is full about this mortgage crisis, this dreadful repossessions, house prices going to drop 30%. You can't turn the TV on, or you can't look at Twitter without saying, or turn the TV on. And maybe that will just politically, or just sit in their minds a little bit, and they don't want to be seen making that worse, because they're so unpopular already. But maybe they don't think like that. I'm not sure.
So I mean, based on what you're saying, the currency play is basically you want to short the sterling either at if they disappoint, or when it gets to 130 or somewhere in that neighborhood, you're going to look to sell it up there.
Yeah, I mean, I'd be shorting it all the way up, but I still think that the economy in the States is pretty strong. There's one or two odd things going on there with money supply. Funny, I saw a fact today that the last time that CPI dropped for 11 months in a row was in 1921, right before you got the depression, just building up into the depression. And the same with money supply, the drop in money supply it's the seventh biggest drop in history that we've just witnessing, or we're witnessing. 5 out of the previous 6 held in depressions, and the other one was the day that the Fed was formed, funny enough, in 18 something or other, and there was a banking crisis. So there are some really worrying signs of what's going on in the economy. But then on the other side of it, employment looks great, doesn't it?
It does. Well, I mean, after speaking with you, I'm going to search around here. I know I got it around here somewhere. I got a tinfoil hat. Sure where it's at right now, but no, look, I appreciate you bringing us, your views on the currency market. You are a legend in the space.
A legend of my lunchtime.
Well, we do appreciate we appreciate your thoughts, especially ahead of the Bank of England this week, which is one of the major banks that most of us currency folk are focused on. How do we better follow your work, Mr. Matthews?
I appear on LinkedIn. I post on LinkedIn, Richard Matthews. I'm on Twitter @Dickie Matthews. I'm quite active on there, often just about football or sport, but I'm quite vociferous in my views about the Bank of England. So that's the easiest way. You can just direct mail me on there.
All right. Well, thank you for being with us every week. We won't be around next week, but we'll catch you in 2 weeks for sure. Richard, have a great day. Good luck during the Bank of England this week, and good luck to all of you. And if you all appreciate what Richard brings to you each and every week, give him a big thumbs up and comment down below if you think that Andrew Bailey is a bunch of bullocks as well.
And good luck to your sons. See you soon, Blake. Bye now.
Right. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.